Okay, good evening, everybody. I am Ricardo from Bluesky Binary, and I will be the presenter of this webinar. Today, we're going to have a look at the basics of binary options trading. So the agenda for today is to discuss a bit the basic concepts about trading. After that, we're going to also explain the candlestick analysis, which is the most famous kind of analysis in binary options trading. And after that, we are going to have a look at all the types of binary options that Binary.com has in his platform. So let's have a little introduction first about the presenter of this webinar. The presenter of this webinar is Bluesky Binary, also known as BSB in the internet, and it's an advanced binary education and trade recommendations group. It is composed by senior traders who teach a variety of binary strategies, and it also provides a 24-hour trade support and analysis in order to allow binary traders to trade safer. BSB, in collaboration with Binary.com, is delivering these webinars in order to educate you, the members, in order to become successful binary option traders. Binary.com meets our very high watermark for quality as a highly trusted and highly regulated broker amongst an industry where trust and regulation is still a major issue today. So now let's head to the actual topic of today's webinar. We're gonna have a look first at what are the concepts of trading, especially of trading binary options in this case. So we're gonna discuss now what are binary options, what's the definition, and how they work. We're gonna have a look at the parameters. So we are going to see what we can actually customize in our trades. And after that, we're going to, of course, explain how the outcome of a binary option works. And ultimately, the most important thing of all, which is how do we make those decisions about our trades. So let's begin. So what are binary options? Binary options are trading contracts, or also called trading options, that you buy from your broker on the movement of an asset over a defined period of time. So you're placing a trade that then you are foregoing a certain amount of your capital, so a percentage of your capital in that single trade in search for a return on your investment that goes from 75% to 90%. So when you place a trade of $100, for example, you have three possible outcomes. In the first one, you win the option. And in this case, you go, as we call it, you go ITM. ITM means in the money. So in this case, you just earn $75 to $90 on top of your initial investment of $100. The second outcome could be a tie, so you go at the money, and in this case, you just get your investment back. And this is a very rare event. It happens statistically 5% of the time, but it can still happen. And yeah, of course, we have a third outcome, which is losing the option. So in this case, you go OTM, which means out of the money. And in this case, you just lose the whole amount of your initial investment, which in this case is $100. So now let's discuss about the parameters of binary option trade. So when you want to set up a trade, what is that you can actually customize on your own? So the first thing is the asset. For the asset, you can have different kind of asset. You can have forex assets, commodities, indices. Then you have to select an expiry for your option. And that expiry can be short, also called turbo, and those are the expiry that go from 1 minute to 5 minutes. It can be standard, so it can go from 10 minutes to 90 minutes, or it can also be an end of day expiry. After that, of course, you have to set your stake for the trade. So that's the amount of money of your total capital that you are foregoing for this single trade. And after that, you have to select the direction of your trade, which can be call or up, or put, which means down. So now, of course, the most important thing about binary options is to understand how the outcomes work. So what happens when an option is lost, and what happens when you won an option. So take this as an example of a trade. You have the price on the vertical line and the time on the horizontal line. So let's say we take a put trade at the entry time with a set expiry, believing that the price would move down, because remember, put means down. So we have two possible outcomes here. We have expiry A, so we have the green line. The green line is the expiry price at the time A, at the time expiry of trade A. So you see, we begin from the red arrow, and the price is going down. It goes down and down. And at the green line, we have the expiry. So in this case, we went for a put trade, and the price went down. So the price closed on a lower position than our initial entry price. So therefore, in this case, we have won the trade. But it can also happen what happens with expiry trade B. So you see the price goes down and down, but then it goes up. It goes up again, and it closes at the red line. So that means that the price has closed at a higher price than our initial entry. So in this case, we have lost the trade. So it is essential, to say the least, to decide, to learn how to make trading decisions, because it is easy to just tinker with the options and push buttons. But of course, in order to win those binary option trades, we have to make decisions, and we have to make them in the right way. So there are two ways you can trade binary options. You can listen to others, and that means you can listen to your account manager, your friends or family, people that want to manage the account for you, people that you want to manage your account for you, robots, auto traders, etc. Or you can have your own opinion. You can educate and train yourself. You can learn to read charts and candlestick and price movements and technical indicators on your own. You can also learn how to analyze major news events and how those affect prices in the market. So ultimately, you can make informed decisions instead of being dependent on other people. So here it's very easy to see which of the two is the correct one, because yeah, you can listen to others, that is possible, but having your own opinion is really what trading is about. Because let's make an example. If you want to invest $1,000, and you can, and let's say that with those $1,000, you invest part of the money to buy a robot, a trading robot or an auto trader, and that auto trader just blows your account, and you just lose all the money that you have invested in the bot and in your binary options account. So you have $0 at the end of this journey. What can you do about that? you can just open another account and start again from zero. But if you invest the same money into online education and even just in practicing for the first time, for the first time, and not even at first, just remember that you have to start with a demo account first. So for the first time with real money, let's say that you invest some of that money and you have some practice with real money, real market conditions. Even if you lose part of that money at first, which will happen because it has happened to every single trader. Let's say that you lose some money at first, but yeah, you're losing some money, and especially if at the same time you're investing in binary education, uh, you are building your career as a trader. You are building knowledge, you're building experience, which is something that, of course, is essential if you want to really make money from trading. So now let's explore a bit the basic candlestick analysis. Now we're going to see what a candlestick is, how you can interpret a candlestick, and what are the basic candlestick formations. So, what is a candlestick? That's a good question. Candlestick charts are the most popular way of looking at charts, especially when trading binary options. So the period of time that each candlestick represents depends on the time frame that you're looking at. So, for example, if your time frame is 5 minutes, then each of the candlesticks that you see in your chart represents 5 minutes of time. And they are calculated using the open, high, low, and close price of the period in concern. So usually a green candle represents an upward movement in the said period, and a red candle represents the opposite, so a downward movement. So this is what candlesticks look like. So a large bullish candle or a sequence of bullish candle, normally depicted in the color green, represents bullish sentiment, and so that means the price may continue to move north. A large bearish candle instead, or a sequence of bearish candles, normally depicted in the color green, in the color red, sorry, represent the opposite, so that's negative sentiment, and that may mean that prices could potentially continue to fall, even if, of course, it's not certain. It's not that easy. So, what's very interesting about candlesticks is that they're not only very easy to understand, very easy to read, but you can also have some insights from them, especially when they come into into what we call formations. So these are the four most famous formations with candlesticks. The first one is a doji. So in the doji we have two large wicks on either side, and we have a very small candle body. The next one, and the doji means represents indecision in the market. The next one is the hammer. With the hammer we have just the southern wick, very large, and we still have a bullish candle body, but it's very small. And the opposite goes for the next formation, which is the shooting star. In the case of the shooting star, we have a very large northern wick, and we have a very small bullish candle body. The last one is the engulfing formation, and in this case it's the bearish variant, because you can have both bullish engulfing and bearish engulfing. So in this case, what happens basically is that we have a bullish candle and then we have a bearish candle. But the particular thing about this formation is that the second candle is engulfing the first candle, because the sides of the second candle is is bigger than the previous candle, but at the same time, the second candle is engulfing the first candle. So we can say that we can the second candle uh, comprises all of the first candle, and this can happen with in a bearish uh, situation, but it can also happen in a bullish situation. Absolutely, we can have a small red candle, and we can have a red candle, a bullish candle just next, engulfing the previous candle, and that means in both of the cases that the market has a sentiment relative to the direction of the second candle. And to put that into simpler words, for this example here, for the bearish engulfing, it basically means that there is some negative sentiment in the market and the price could continue to go down in the next period that we are selecting. So for binary options, especially in the binary.com platform, we have a large variety of trades. So now I'm going to explain you all of them. We're going to have an overview on them. I'm going to walk you through them, and I'm also going to teach you how to place a trade. So these are all the categories and assets that you can get. So you can see with the arrows where you can find the assets, where you can select the categories, and you can also see that you can find the explanation in the binary.com page for every kind of trade. Even if I'm going to explain them now for you, every time you have some doubt, you can always look up for the explanation in the page. So the first one is, so let's just have a quick overview of the categories and assets first. So we have up and down, and in that category we have rise and fall and higher lower. Then we have touch and no touch, and we also have in and out options. And in that category we have ends in or ends out, stays in or goes out. And for the assets, we can select Forex, we can select indices, and we can also select OTC stocks, commodities, and volatility indices. So the first category that we're going to see now is the rise and fall, which is a subcategory of the up and down type of binary option. So in this case, if we select rise, we win if the payout, we win the payout if the exit spot is strictly higher than the entry spot. And if we select fall, we win the payout if the exit spot is strictly lower than the entry spot. In the same category, we have higher lower. In this case, if we select higher, we win the payout if the exit spot is strictly higher than the barrier. If we select lower, we win the payout if the exit spot is strictly lower than the barrier. So you may ask, what is really the difference between those two? Well, that's really simple, because for the rise and fall, you select the entry price by the moment you open the trade. So you open your trade at the current price, and so your trade will be won or lost depending on the movement of the price after you open the trade, and of course depending on what the price does. For the higher and lower, it's different because you can select what the price is. Sorry, I might have misphrased that. Let me say that again. For the higher or lower, you can select what your entry price is. So for the first one, we have an entry spot. For the second one, we have a barrier. So we select a price, and we want the price to end up higher or lower than that price that we have selected. While for the raisefall, we select the price, we select the current price when we are opening a trade. Next one is the touch no touch, and this is really simple. Basically, we just select the price, and if we select touch, we win the payout if the market touches the barrier, so the price that we have selected, at any time during the contract period. So the time, so time is not relevant in this kind of option. If we select does not touch, of course we win the payout if the market never touches the barrier at any time during the contract period. Then we have the in-out options. So here we have two prices. We have low target and high target. If we select ends between, we win the payout if the exit spot is strictly higher than the low barrier and strictly lower than the high barrier at the same time. If we select ends outside, we win the payout if the exit spot is either strictly higher than the high barrier or strictly lower than the low barrier. So in this case, we want the price to break, let's say break, one of the two barriers that we have set. And then, last but not least, we have stays in, stays out. So, if we select stays between, so yeah, we still have two targets here. We still have two prices. And if we select stays between, then we win the payout if the price stays between and doesn't touch either of the barriers at any time during the contract period. If you select goes outside, you win the payout if the market touches either of the high or either of the barriers at any time during the contract period. So again, you may wonder what's the difference between those two options. Well, the difference is for the time. Because we still have two barriers, but for the case of for the case of ends in, ends out, we want the price to stay to end at a specific expiry of time. We want the price to end either in or out of those barriers. For the stays in, stays out, we actually select a period, which is a bit different. So for that, we have an expiry. So that means that when the trade expires, we have either one of the two outcomes. For the stays in, stays out, we have a period. So it depends in that period. If in that period we have, let's say we select stays in and the price goes out, even if it's before the end of our period, we lose the trade, because the condition is that in the whole period of time, the price must never touch one of the barriers for the stays in, and the same goes for stays out. So, last but not least, how do we place a trade in the Binary.com platform? We have to select the asset at first, which can be, as I've said, let's go to that again. It can be Forex, it can be some indices, it can be OTC stocks, it can be commodities or volatility indices. Then we have to select the duration, which is the expiry, and that can be, as I've said, short, so from 1 minute to 5 minutes, It can be from 10 minutes to 90 minutes. It can also be end of day. Then we select the stake, which is the amount of money that we are placing in this single trade, following, of course, proper money management rules. And then we just have to select if we want the trade to be a call trade or a put trade. So now we're gonna discuss something that is really, really important in binary options. You have to be aware that binary option, as I said earlier in the webinar, is a sector in which trust and regulation is really still a big, big issue today. And so, especially if you're new to binary options, be absolutely sure that at some point in your journey, you will be exposed to some kind of fraud or scam because the internet is full of those, full of those. So in order to preserve our capital, we have to understand how to avoid all those traps. And we have some suggestions for you on that. The first one is do not trust bots, never trust bots or other traders or copy traders because 99% of them are scams driven by affiliate marketers that are not traders. Affiliate marketers are basically people that earn a commission of money by making you deposit a very large amount of money into a broker account. But they are not actually traders, so they have no idea how to read the market and how to trade. And so they have also no idea how to build another trader, a copy trader. Also, be very aware, as I've also said earlier in the webinar, that it's difficult to make money with FX or binary options. Just 5 to 10% of all traders make money in the FX. And the story is not much different in binary. So understand that in order to beat the markets, you need to take your time to understand the strategy and the system and test them. Otherwise, you're just gambling. Experiencing drawdown at the beginning of your binary options journey may be a part of every trader's journey to eventual success. And that may teach you the flip side of making trades, namely money management, which is a skill in itself. It's a fundamental skill in itself. Even if you're a good trader, if you have a good strategy, but you don't use the proper money management, it is absolutely 100% sure that you will just lose money for your entire career. And last but not least, remember that only 5% of signal services and signal rooms are legitimate in the internet. And there's a lot of those. There is really a lot of signal providers, literally everywhere, in Skype, in Telegram, on forums, on YouTube, everywhere. But of course, just very few of them are really legitimate. So be very careful when investing your hard-earned money into them. Always ask at least for a performance record and another trail. So this is the end of the first part of the webinar. And now we can have a bit of a Q&A. You can ask questions to me and I will answer to them. And after this Q&A, we're going to have a few words on Signal Hive Hybrid, and yeah, and then the webinar will be finished. So yeah, for now, just ask any question you want and I will answer them. Well, okay, we shall continue then. So before talking about Signal Hive, this is a link that you may find useful. It's www.shop.binary.com, and here you can find all the apps, gear, and everything about binary options. You can find web applications, mobile applications, thoughts and strategies, applications, ebooks, and also apparel, such as shirts and various clothing. And before I continue, please observe this high-risk disclaimer, and I will give you around a minute to read the disclaimer, and then we can proceed with the webinar. Okay, so today I'm going to present you the Signal Hive hybrid. Signal Hive is the #1 binary options signals marketplace, providing over 25 high-quality and back-tested trade setups per day across all day. These are based on proprietary algorithms of Bluesky Binary and Signal Hive, which have been developed over years and of testing and data. The hybrid technology allows you to replicate signals on Signal Hive into your binary.com accounts in real time. So you don't require access to your binary options to your binary.com trading platform, but you need just a connection from Signal Hive to your binary.com account. This technology saves you, of course, valuable time that is often lost in between a signal being blasted on Hive and then you manually switching over to your trading platforms and then selecting the asset, expiry, setting trade. And of course, you may understand that in a sector such as binary options where time is literally gold, you want to be as quick as possible when taking a signal. And so in this case, the hybrid just saves you that time. This technology is currently engineered for semi-automatic and also fully automatic trading. And I'm going to discuss a bit about those two. So we have the semi-automatic trading, also known as the SAT mode. With the SAT mode, you can manually obtain better entries on Signal inside Hive, and thereby, depending on your knowledge and expertise on trading, you can potentially generate a higher win rate at reduced risk than the underlying signal stream. This applies to all robotic and human signal streams that we have in Hive. And through Hawkeye technology, you can also set some rules for specific bid thresholds, and this can vary per stream. And we also have the fully automatic mode, also called as the FAT mode. So the FAT allows you to automatically replicate instantly. And by instantly, it means from half a second to maximum 2 seconds of time for the replication. So at price, better or considerably better entries on Signal inside Hive, thereby potentially generating a higher win rate at reduced risk than the underlying signal stream. This applies to both robotic and human signal streams. The FAT mode, though, requires you to simply remain logged into your Hive dashboard, either on your computer or via a VPS, but requires no further manual input. So we have mentioned the Hawkeye a few times in this webinar. The Hawkeye is the Hive ultimate risk management system. The Hawkeye allows you to manually add desired signal to a watch list and let them be automatically replicated only when they meet your desired risk settings with the SAT mode. With the FAT mode, you can just set the Hawkeye risk management for each signal stream, and then you don't have to intervene manually in any way. And so it's real time, and it replicates the signals into your account in under half a second in either SAT or FAT mode. If you change your mind, you can remove signals from the watch list, and that way you will discard the signals. So you can also change the risk thresholds during the monitoring period if your risk appetite for that specific signal changes. So, this is what the SAT mode looks like. When you're in the SAT mode and you see a signal fired, you will see a replication symbol just next to the name of the signal provider. By clicking on it, the replication model window will slide in onto your screen, and here you can enter the trade, call it put, at the current price, or add the signal to a Hawkeye watch list in order to obtain a better entry. For the fully automatic trading mode, as I said, you can determine, so after you determine whether or not you want SAT or FAT mode in the first place, then you select your trade size in your local account currency, and the maximum is 25 per trade for now, but that will be lifted up. And if you have chosen FAT mode, in this area you determine if you wish to force the system to take the trade immediately, or at your desired risk settings with the Hawkeye system, for which the range is as follows. It can be extreme risk. It goes from extreme risk, which is immediate replication, to no risk. And in the middle, you have very high risk, medium risk, semi-medium risk, low risk, very low risk. So that was it. This is the end of the webinar. If you're interested in finding out more about Signal Hive or Bluesky Binary, you can add us as Bluesky Binary on Skype. You can reach us at support@blueskybinary.com, or you can visit the websites, which are www.blueskybinary.com and www.signalhive.com. And for either of these two, you will receive a free trial for 7 days, where we will give education and trade recommendation. So this was the end of the webinar. I hope the webinar was of use to you all, and I am looking forward to see you on the next webinar. So thank you for attending, and have a good day.